Well, g'day there, everybody. Thanks a lot for joining me as at Thursday, the 17th of January 2019. We still have approximately 20 minutes left in today's session. However, I just wanted to really make it well known that our outlook, so to speak, on this market and what we are expecting over the next 1 to 2 weeks hasn't shifted whatsoever, even considering, of course, that this stair-step pattern has broken to the upside. As it stands at the moment, on the Dow Jones Industrial Average, we are up just over or just under 110 points. We were up significantly more during the session. However, again, as we are coming back up to retest a lot of these old support areas as new resistance, you can expect volatility, unfortunately, once again to begin surging. If I start tying in, of course, some of these oscillating indicators, you can see they're just off from the Christmas lows over here, dated the 24th of December. On this bullish bounce, you can see that we are pushing back up into oversold territory. This is the oscillator settings for the Dow Jones Industrial Average. If I go into the S&P 500 again, this picture doesn't really shift all that much. We are looking to see that of a cross take place. On the stochastics, the RSI is coming up very short term into overbought territory. And the MACD, you can see that the histogram lines, they are relatively stable. But again, it would be a big shock to me, so to speak, if we didn't see this market temporarily pull on back down. Probably freak out a lot of people who are, still a little bit upset given the correction that we have seen since late September, early October. It may bring back a little bit of recent fear as to some of, again, that market volatility. But overall, we are expecting this market to come on all the way back up and retest these all-time highs and ultimately take them out. If I bring up the NASDAQ as well, you can see that we are very close to getting that stochastics, the RSI, and the MACD as well. What makes this interesting too is that this is the first time really since the breakdown earlier in December where we retested the declining 50 exponential moving averages, where we have short-term or temporarily pushed on back above the 50 EMAs. The NASDAQ at the moment, as it stands, it is the strongest of the three closely followed markets. You can see we are pushing back up above the 50, but again, expect volatility to spike. And what I mean by that is to essentially see that of dark candlesticks develop over the coming sessions. I'm a little bit surprised that it hasn't shaped up this week, this particular week. We were looking towards really the back end of this week. Obviously, we have tomorrow's session, which is set to take place, but really you should be focusing on this as we move and transition into next week's session of trade. It is relatively dangerous to actually be buying this market at the moment, considering the pullback that we are forecasting at the moment. And you will have a better opportunity to position yourselves into index plays if you choose to do so. You can see on my screen over here on the NASDAQ, the index play, the contingency order set up to enter into the queues was down here at 6,696. So if we bring up the S&P 500, 2,525, and on the Dow Jones Industrial Average, the diamond positions, 23,432. All of those trades at the moment are profitable, but again, short term, you should be expecting volatility to push these markets back on down a little bit lower. It sits quite nicely. It makes sense. If you want to do Fibonacci retracement levels, percentage retracements of this sell-off, we are now roughly 50%, which is a big bounce, which has taken place really in the space of about 2.5 weeks. So quite impressive. We have been expecting it. The long-term primary macro trends are still in effect. Again, trends are assumed to be in effect until they give us definitive signals that they have reversed. So when this sell wave does come, understand that the primary trend is still bullish as long as we remain above the swing lows over here. And more importantly, on the S&P 500, above this magnetic colored line on my screen here, anything in this vicinity is still macro bullish, even though it may get a little bit scary depending on how deep this retracement actually occurs. If I bring up the declining exponential moving averages, you can see to a lesser extent the S&P 500, it is marginally above it, not to the extent of what the NASDAQ is. You can see that we are about 20, or actually about 12 points above that declining 50 EMA. So you should see over the coming sessions at some particular point some dark candlesticks. It has been, or at least they have been, very rare. In fact, since Christmas, we've really only had 2 dark candlesticks on the S&P 500. I was reading an article on the small caps having the best start in over a decade. I mean, quite some interesting statistics coming out of this bounce taking place collectively across these markets. The markets are still healthy, even considering, of course, that correction that we were in really over the past 3 months now. Time does fly. Here we are already halfway through the first month of 2019. And we are still very optimistic on these markets, really for the entirety of 2019. But at the same time, all right, we're looking for another opportunity to add to our already existing positions to the upside on the indexes, and also, of course, individual trade setups. Now, we are moving into earnings. One of the stocks which in our top 12 list anyway that is reporting relatively soon, or as at the close, is Netflix. You can see that it has moved quite parabolically off from the lows down here at $230 moving into Christmas. And here we are, we're trading at $350. So it's going to be interesting to see the reaction to Netflix's earnings. However, the following week we are, or at least we do have a very busy earnings period coming up. We've got Apple on the horizon, also Amazon on the horizon, Boeing Airlines. By the way, these are the vertical lines drawn on my screen at the moment. So we're going to have to navigate through earnings. I'm trying to move into the stocks that are reporting next week. Caterpillar is one of those stocks. We also have COP further out into January. I believe CVX is next week. Oh, actually, it's the first session of February. Google again is trying to break above this resistance line. I would not be jumping into Google at the moment, not with how the markets sort of sit, where they're positioned and expecting that retracement. There's a good chance that this is going to provide some sort of form of a false breakout, which is going to essentially retest the breakout line, and then that will be the period to go long over here instead of rather going long above the swing high of Wednesday and today's session. Be careful about that. I would not be gravitating towards that individual trade. We've got IBM set to report next week. Netflix I just touched on, which is in a couple of minutes time, and Tesla, which is further out into February. All right, so again, moving into earnings season, the markets themselves are at a very critical area. Expect the market to pull on back down. Prepare yourself mentally. It is going to be a little bit of a psychological minefield when this sell wave does come, but do not buy into, all right, a lot of the fear and a lot of the talking heads, so to speak, the narrative of the market. If you see this market potentially on the Dow Jones come all the way back down to 23,000, this is not that of a larger sort of bear market or the beginning of a bear market. In fact, this is just the residual effects of lingering sort of selling waves that are very close to ending, and if anything have already turned as at December 26th off from this one white soldier candlestick down here, where the markets collectively on this particular session rallied over 3%. Okay, if I very quickly bring up the Russell 2000 as well, you can see this is a small caps. We are still breaking to the upside. Even during today's session, it is still rallying. But overall, I mean, if I had to draw a red rectangular box, it would be right in this location up to about 1,500 on the Russell, which sets the stage for that reset of the oscillators, a retest of the 50 exponential moving average, and then ultimately that setting up of that next higher low, which is going to lay the foundation for what will be a very strong move. Now, it looks as though we are sort of somewhat shaping up V-bottoms on the markets. The problem with V-bottoms is that they happen very, very quickly. I've said this repeatedly. They happen, they come, they go, and then once they've already moved quite a distance, people say, it's a V-bottom, and there's really no way to actually foretell that of a V-bottom. It's always better if we can actually see the development of a double bottom or even a triple bottom, but sometimes they just shape up in this order, and if anything, it is a very bullish signal, the strongest of, I guess, those three types of reversal patterns to actually set up. We got the last one anyway, was all the way back at the end of the bear market, very early on in the period of 2009. You don't get the reset, or at least the retest. I mean, you don't have to come all the way back down to the lows, but very rarely when you see V-bottoms, they even sell off anything material whatsoever. I still believe we are going to sell off, unfortunately, short term, but it hasn't shifted whatsoever our analysis and forecasts further into the first quarter of 2019, and probably really into the back end, the fourth quarter of 2019. I'm expecting this market to be considerably higher than where the all-time highs have been sort of set up in September and October, but at that particular point, and based on other technical indications, we're going to be looking very, I guess, objectively at the market, constructively, and relatively critical too of an impending reversal on the macro time frame. At the moment, however, the intermediate, the minor level, and the macro level of the trend are still firmly up. And as you can see, it's good to have those bullish positions because essentially they're just going to continue to make money each and every day. All right, so enjoy that, everybody. Hands tied a little bit at the moment. I was waiting for this market to actually reset, or at least come on back down before I gave you an update. It obviously hasn't happened yet, but I'm just forewarning you about what is on the horizon, and just so you're prepared for it, really. You understand it, and when it happens, it doesn't upset you, it doesn't scare you, and hopefully, above all else, you don't sell into what may be a week or so worth of a retracement collectively across the board here. All right, so that's going to do us as at this Thursday afternoon market recap. All the best, everybody. If you have any questions, email me, success@pivotpoint-trading.com. Otherwise, jump into that pro class and have a look at that analysis, which we will be doing as at this Saturday. All right, all the best, everyone. Farewell.